I bought 10 high yielding dividend ETFs and I am tracking them all through 2025. Now, I know you guys are familiar with the YieldMax ETFs, the Roundhill ETFs, the Defiance ETFs, but are those really the best ETFs that we can be buying? Well, I chose 10 that I like that are a little bit lower yielding and not nearly as popular as some of the YieldMax ETFs, and we're going to show exactly which ones are worth holding and which ones are not. Now, we've known that the market has been all over the place. It's been pretty rocky recently. Some of these are in the red, some of them are in the green. The dividend payouts have been pretty remarkable so far, and it's only month 2. So I'll be tracking these all through 2025 so we can see which ones make people the actual best return rather than just being flashy and having high yields. Let me know what you guys think about this down in the comments, and let's roll the intro. If you guys haven't met me before, my name is Spencer, and I like to help people with investing information. I like to give educational content, and mostly I like to be very transparent when I track different returns from things in the market. So for instance, we all know the YieldMax ETFs, very popular. Some of them return a lot better than others, and so I like to showcase that with all sorts of accounts where I buy all these stocks, I track them, and I show you guys what they do. I should say ETFs. I show you guys how they perform. And so that's the whole goal of this account. I want to see how this account trades against the weekly pairs, apparently the daily pairs, if those are still coming out, and then the YieldMax account. So all of these things are going to showcase exactly what makes the most money in 2025. And that's what the channel is based on. That's what I really, really care deeply about. So we can see, just so you guys know, not all of these paid a dividend in January. I didn't own them all long enough. So some did miss a dividend in January, but I will be filling that in. We can see the monthly income has jumped quite a bit. We made $8.57 our first month, and in February, we're at $14.24. We have gotten all the dividends in February, which is really, really nice. Now we see our diversification ranges all over the place, iSpy being the highest and AIPI being the lowest, but they're all between 9 and 10%. If you guys are interested, this dividend tracking spreadsheet, not only this specific one, but the template, as well as the total returns for the YieldMax funds, all of these are available for my channel members. It really helps me out when you guys are channel members because it gives me the opportunity to do more challenges just like this. Because all of these accounts, this is real money. This is not paper trading. I have put $1,000 in like 3 or 4 different accounts so far. And so that money does add up rather quickly. But also, if you're not interested in using a spreadsheet tracker like this, your views help me quite a bit. So it's really, really cool what the account has been doing. Normally, we've only seen a few dividends paid out from each of these, so I like to go through and check and see what's been paying what. We only have one payment from JEPQ, only one from QQQI, and we do have a couple from IWMY and the other NEOS funds. So what we're going to do now, we're going to jump into the monthly dividend log where I track each payment every single month and see what has paid out the most dividends so far. You guys can see the 10 I selected on here. I will go over them and give a little more of a breakdown onto why I chose these funds, but first we'll just talk about what they've paid out so far. So IWMI has paid out 2 dividends nicely, $1.26 and $1.21, which is really, really solid because we're on a 2.5% return with no erosion. I don't know if this thing has dropped in price or not. It probably has because the market's been all over the place. That's already a 2.5% yield in 2 months, which is pretty impressive. We were right around $100 for each of these. So it's $100 invested into each of these. Then we have SPY, which is SPYI, different than iSpy. They really start confusing me with the IQQQ, QQQI, back and forth. But SPYI paid out $1.01 and now $1.02. Now, I did own this one in a previous challenge that I did, and I was very, very impressed with it. So I threw it back in here because it is one that I like to own in my normal account as well. I have it in my Roth. Then we have QQQI that paid $1.20 and $1.18. Very impressive. We have iSpy, which, again, I didn't buy the iSpy and iQQQ in time for the first dividend, but I will factor that in just so we have a better understanding if it paid out, an average, what it would be, because it's going to be a little bit behind the others if I don't fill that information in. But we had 74 cents and $1.07. JEPQ paid out 80 cents, not bad by any means. And then AIPI, which has been doing absolutely insane lately. We have $2.96 and $2.77. But even though we have gotten almost $6 in dividends in just the first 2 months, I do think this one has taken quite a hit because the market has just flipped over, it seems. Then we have FEPI, which is paid $2.14 in January and $2 flat in February. I do have drip on for all of these, so these payments should continue to grow. And while I do like these 10, I am going to have them all through 2025. I may even carry them on for longer because it's really cool seeing how these progress, and I am a huge fan of a lot of these, so it doesn't hurt to keep this challenge going over and over and over again. Then we have XPay. XPay is a really interesting fund. It paid out $1.72. And then we have SPYT, the last addition to the fund that I think is actually really, really important. A lot of people like this one, and for good reason. It pays out a pretty consistent dividend, and the price hasn't been too shabby. So $1.73 from SPYT. Now let's jump into our overall return tracker, our positions tab, and see what's made us the most money, factoring in the net loss that we've seen in the stock market recently. Let's talk about why I chose these ETFs. So the 3 NEOS ETFs, I'm a huge fan. I'm a really big fan of NEOS. Their ETFs are really solid. They range from like 10 to 14% yields, and I haven't seen any NAV erosion so far. They usually go up 1 to 2% every single year. Last I checked, they were beaten down with the market as a whole, but still, really solid returns, and I usually buy them on every dip that I can get because then the dividend yield is better. You get a better return on your money, which I'm a fan. I'm biased towards those. I own, I believe, at least all 3 of them in my Roth account, significantly more than I have in this account with just the $100. So yeah, I like them. Then we have the Pro shares. We have iSpy and iQQQ that have a little bit slightly yet less of a yield, but have really consistent returns overall. Because again, the entire point of this is, are these flashy ETFs that we're seeing from Roundhill and YieldMax, are they actually worth it? Are they worth, seeing some NAV erosion? Are they worth seeing, a down market where they get destroyed? I want to see how these all compare. Because even though these pay out less in dividends, you're not going to get an $8 dividend from any of these. But maybe that's a good thing. Maybe it's definitely a good thing. And so Pro shares, I'll see how they perform. I've heard good things. You guys seem to like them as well. Then we have JEPQ. Definitely one of my all-time favorite ETFs. Very consistent. You guys are probably familiar with JEPI from JP Morgan as well. I believe the pandemic year, it was one of the best performing ETFs. I think it was the highest purchased ETF right behind SCHD that year, which is really, really impressive. There's a lot of ETFs out there, and JEPI was absolutely doing phenomenal. It kind of cooled off a little bit, and that's where I pushed my focus into JEPQ. Then we have the REX AI Equity Premium Income ETF. This is AIPI. And it's an AI fund. It holds a lot of AI companies, does what these income ETFs do. And so AI, I'm pumped about. I think longevity-wise, it will do well. And so my cat's making some noises, but I like it. I like AI. You guys know that. Then we have FEPI, Rex Fang Innovation Fund. Really consistent, really high dividend yield. It was yielding like 20%, which is really, really solid. And so I decided to throw it in there. I want to see how these ones perform against their NAV as well, because I've never owned a Rex fund before. So I don't have these in my account. I'm less biased against these than some of the others, but I'm really interested in seeing how they perform. Then we have the Roundhill S&P 500. This is the only Roundhill fund in the account, and it's XPay. So XPay is a really interesting ETF where the goal is a 20% return every single year via the dividend. So they're trying to get you at a 20% distribution rate and have little to no net NAV loss, which is a very interesting idea. Targeting 20% is hard to do because if you think about the S&P 500 in, over the years, multiple decades it's been trading, it averages like 8 to 12%, usually within that range. We've seen it go absolutely crazy this last year at 20 something percent. It's cooling off a little bit now, but still kind of pushing all-time highs. So XPay, if they can do this, it would be a fund that I would hold forever. Even if they can keep it at like a 16% or a 14%, you're still averaging better than the S&P 500. And I like to invest in everything. I'm very, very diversified, probably to a fault. But this is one that I'm really, really curious about, probably more than any of the rest, to be honest, just because the concept is really cool. It makes a lot of sense to me. And then the only Defiance fund, we have the S&P 500 Target Income Fund, SPYT, consistent, solid. Defiance, their weekly payers have been diving. If you guys aren't familiar with our weekly account, we have a full account of all the weekly dividend payers. I'll link that at the end of this video for you guys, for those that are interested. It's really interesting how they're performing, but Defiance has been tanking. Terrible NAV erosion. The dividends are high, but slowly dropping because they can't keep up paying out these high dividends every time because the price just keeps on going down. So it's a little breakdown on each of these. You guys can see the number of shares that I have and the share price we bought them for, which we all bought them at the beginning of January. So far so good. Let's jump into the total return. One of my favorite things about this tracking spreadsheet is the 52-week range. It just shows you, like if I was looking to buy, I'd be looking at the ones that are lower end. They're more on a discount. And so it's really, really cool when you're using it for your own personal portfolio, which I will be putting out some videos on all my dividends. I get so many dividends now with the weekly payers in my accounts, and it's really, really fun, but it's insane to track. So I'll just say that. It's tough to do, but I do want to do it so you guys can kind of see what I like to trade and where my dividends are coming from predominantly, because there are a few huge positions that I have, and most of them aren't monthly payers, so it kind of mixes it up. But total return, we can see we only have a few of them that are beaten down. And the craziest thing is the ones that are paying out the most money are the ones that are the most beaten down. The REC shares, AIPI and FEPI are both down, one down 4%, one down a little over 3%. IWMY is down 0.2%, which is not good by any means, but not nearly as bad. I was expecting it to be a lot worse. And this is why I'm really thrilled by not only this portfolio, but this challenge as a whole. Because if you guys want to know, we might be going into a bit of a bear market. I don't know. I'm not going to try and predict what the market's going to do. But if we are, I want to know what's going to perform best in a down market. And so far, this is pretty impressive. I mean, we've seen iSpy still up 2%. Yeah, we have SPYT up almost 2%. We have XPay still up 1% despite these last rocky couple of weeks. My own personal portfolio was down about $350 last month, which isn't a whole lot. I'm very diversified, like I said. So some things are running, some things are dropping. The dividends are getting paid out. All these things factor in at once. But it was kind of a rough week, especially. So I'm really impressed by how a lot of these have been performing. Some are nearly flat, like IQQQ. JEPQ's a little bit up, but again, we're still missing a dividend on that one, so that will factor in and change it. I'll be updating that for the next video for sure. But still, I'm very, very impressed, and I want to know what you guys think. Like, is this challenge worth doing? Should I pull the money out of these and put it into something else? Because I really like this. You can see our cost basis. We're almost all around $100. Some a little bit over, some a little bit under, but the difference is kind of negligible in my opinion. And we have the market value. So we saw the market value. None of them have crazy dropped market value wise besides AIPI and FEPI. So they're down. Wow, AIPI is down 970 and FEPI is down 730. So those funds might be NAV erosion funds. They just might be. It's a bit of a bummer. I know that IWMY is down because the Russell's been taking a beating too. Compared to like the NASDAQ and the S&P 500, the Russell it's a small cap index, so they're usually a bit higher risk, and it's sometimes what people will sell off first in a market because they're smaller funds. They're small cap funds. So it's really, really, it all depends on what people want to do, but that's usually how it goes. I'm not saying it's going to go that way again, but let's see the total dividends that have been paid out. We've got $2.47 from IWMY, $2 from SPYI, and $2.38 from QQQI. So it's going to be cool to see what pays you the most money. If you guys are interested in just direct income, then if you don't care about NAV erosion, then the RexFang funds might be for you. AIPI, almost $6 paid out. FEPI, $4. So that's double what a lot of these other ones even are. And then I was really impressed by the NEOS funds. Like I said, I might be fangirling a little bit here, but those ones, they're my favorite in the account. It's why I own so much of them in my normal Roth account, because they're still able to return $2 in dividends. They pay out a good return, and they're not dropping like crazy. They are down a little bit, but the whole market is. Not the whole market. A lot of the market is. A lot of the more speculative plays are. So it's really interesting. We'll see how this actually does play out. I really, really, really want to know which one performs the best. And I'm so curious if this outperforms the Yield Max portfolio, which I'll be doing an update video later this month. If you haven't noticed, I'm really pumped with this account. But before you go, don't forget I am doing a giveaway in celebration of hitting 10,000 subscribers on this channel. You have to go to my last weekly dividend ETF video. It has the title with giveaway in it, and then you can enter by following what that video says to do. I'm really excited to give away some free money to you guys from all the support you have given me. I am so blessed, and I can't appreciate you guys enough. Thank you so much for watching.